Aloha everyone, I hope you've had a pleasant weekend. This is your video lesson for Monday, August the 7th stock market session, I do believe. Doing a really quick look at all the indexes. I want to start with the most important one, the Russell 2000. That's the one I always watch because most of my holdings are normally going to be from stocks around the small cap area of the market. IWN finally, after all the selling that we've seen recently, finally bounced on Friday. Nice little move. Wish volume would have been there in the market overall, but volume was below average and lower across the board. So there's nothing you can really do about that. It'd be nice to see the bounce come with more velocity, which means the Russell 2000 would have been up over 1% and on higher volume, but at least the bloodbath stopped. Now, if the Russell 2000, our models are currently under buy still under the, or excuse me, it switched to neutral on this one. Went neutral whenever we cross below the 50-day moving average here, with all the recent warning signs starting to show up with the poor seasonality and earnings season. So it initiated a neutral switch sooner. If we break these August and July lows right here, especially this June low here, then this model will switch to a sell signal, which means only the best stocks in the best sectors really bucking the trend are going to probably trigger signals. But for now, neutral. But these support lows break, the June, July, August lows, this thing is going to switch to sell. So just keep that in mind. It retakes the 50-day moving average. We're still in neutral. It retakes the 50-day moving average on huge volume, a 2%, 2.5%, 1.5% price move. It'll switch back to buy immediately. But if it's another one of these lame, weird V-shaped bounces, this model will not switch to buy until it hits a new high. And then the only other model not under buy is the Dow Jones Transportation Average. It broke here hard, switching from an immediate buy signal to an immediate sell signal. Quite rare indeed, and hasn't moved since. This thing is pretty ugly. You could also say that it's a neutral signal if you want, because we haven't broken the 200-day moving average, but that velocity and price movement that I tell you about was so strong with red bop that it's just a straight up sell signal on the Dow Jones Transportation Average as far as I'm concerned. But technically, if we really, like, if I have to obey the model as it is, it's technically just a neutral signal because it was just the first crack of the 50-day moving average. But like I said, the velocity and sell signal, it's a sell signal as far as I'm concerned. That's how it's operating. Now on the flip side, the Dow Jones Industrial Average is the only index still trending up, but another one of these V-shaped bounces. So this V-shaped move, they always end in a pullback, but that means we can just find support the 50-day moving average. But the Dow Jones Industrial Average starts selling off. I'd assume the rest of the market is selling off unless we see a rotation, which would be great. So for now, that model is under buy. S&P 500 is under buy, and the NASDAQ model right now, technically under a buy condition because it's over the 50-day moving average, but this recent selling here, if it breaks this low right here, it will switch to neutral. There will be no doubts about that. A break below the 50-day moving average, if it still has this red bop on the NASDAQ 100 especially, but let's just see what it looks like. NASDAQ 100, still some pretty ugliness. But the thing is that if it breaks a 50-day moving average on heavy volume, you just don't have a 50-day moving average volume break. You have a V-shape, fake out, breakout, rollover, breakdown. That will switch the model to sell. So with all that out of the way, I have a few long positions or some speculative long positions. They all have earnings coming up. They're speculative, with us being in a poor seasonal period. And let's not forget, on the most shortest end of the yield curve, there's been a slight inversion. When I talk about a yield curve inversion, I'm talking about the entire yield curve. Look up the dynamic yield curve on stockcharts.com. Take a look between the 3-month and 30-year yields in 2006, 2007, and even back in 2000, and you'll see what I'm talking about. But with the short inversion on the very short front months, and with us in a poor seasonal pattern, and with our models under different conditions, and with stocks acting weird, I exercise caution here, and I still don't want to produce these speculative positions to every member. If you're a platinum member, you'll find it on its respective position, the new positions page. But let's get to the new longs. Now, like I said, I'm only taking new longs here if the risk is extremely small. So let's say this first long fails completely. XE&T at most would be a 7% loss, but that's not going to be anywhere near what I'm going to lose on the position. The most I would lose is under 5%. And let's look at some of the previous measure moves. Let's just take this move from here to up here, that's a 168% measure move. Let's just take this move from here to here. That's a 45% move. So think about this, 45% potential gain on the most short end to just a 4% risk. That's over a 10-to-1 reward risk ratio. That's what I'm talking about here. So not only do I have to have massive reward risk ratio in my favor, I have to have a small inherent risk, and XENT does it. XENT, I want to get long at 29.65. It's technically extended from its 20-day moving average, so I cannot use the high of the day. So I want to get long at 29.65. My first cut loss level, that gap up low, 28.55. It fails 28.55 right here, I will be out a half. I recommend, though, for those that take these positions, especially if you're a new trader, to really keep your risk tight, and if it fails 28.55, just get out of all of it, because if it fails at 28.55, right now in this market it's 50-50. At least it's not 25.75, 25% chance of working. It's 50-50. But if 28.55 fails, the chances that 50-day moving average comes into play is also right around 50-50. So it's kind of a risk if the first level fails. But for me, because it's only a 1% long position. This showed up in my tertiary scan. It had an 86 IBD composite rating, and since it's a recent earnings winner, I decided to bump it up to become 1% of my account capital. And just think about that. I'm putting anywhere from $4,000 to $5,000 into this stock, and I'm paying $1 in commission, and I'm risking under $100 if I'm wrong. I'll take this, or right around $100 if I'm wrong on the first and second stop loss level. If I use the first stop loss level, I'm risking $50 on about a $5,000 position with $1 commission. This is the kind of reward risk I'm talking about here. So 29.65, 28.55 first stop, 50-day moving average final stop. New traders should just use 28.55, and since it was only in one scan, but IBD confirmed it as trying to become a higher quality stock, especially since it's an earnings winner. Remember, if you read the earnings headline, you're going to see it had a loss. It had a loss. How's it an earnings winner? Price action is all that matters. Obviously, whoever had a big position in this stock was expecting much worse numbers, and that didn't happen. So now they're buying it back, and maybe there's a major short squeeze, and this thing squeezes up to 50 in the short term. So XENT, 1% of my account capital, 29.65. 28.55 first stop, 50-day moving average last stop. And then the next one on the same line, QDEL, recent earnings winner. You have that big previous move, pullback, basically a Fibonacci retracement. I haven't pulled up the Fibonacci retracement line, but you would start from the close here on the day before the big gap up, and you go to this high here, and I think you'll find that that's getting right around that 50% retracement area. So you got a Fibonacci retracement play. The only thing I didn't like is that volume was heavy on the pullback. I would have really liked to seen it below average, but with the max green bop, the tight price pattern here, the rounding up, the curling, I haven't checked the RSI and MACD, but if it's confirming the curl, that's even better. Now, once again, like I said, reward risk ratio. Let's say that just from this breakout point, we get another similar move. We're looking at a 41% gain. So with that possible 41% gain to right around a 2 to 3% risk in the trade overall, once again, we're looking at a 10-to-1 potential reward risk ratio. So this is an easy trade for me. And even if I use the 50-day moving average, we're looking at a reward risk ratio of over 5-to-1. So QDEL, I'm getting long. Limit order at 32. It is not extended from its 20-day moving average, as you can see. And also what I like to see is that the stock is touching the 5-day moving average. So it is doing that, indicating that the curl is in effect. Want to get long at 32. First cut loss level, 31.05. Final cut loss level, the 50-day moving average, and that'll be trailing up. What I suggest new traders do right here, since we're in August, September, limit order 32, final stop 31.05. To be honest, I want to see this thing work immediately. However, if it doesn't work higher immediately, and if it continues to base sideways here with max green bop, I want to give it some room to back and fill before it eventually breaks out. The symmetry of the downtrend isn't quite equal to the symmetry of the uptrend, and definitely not the symmetry of the overall uptrend. So a longer sideways pattern would actually be better. But QDEL, that's fantastic reward risk with very minimal inherent risk on the total dollar amount. XENT, ditto. All right, everyone. Great luck during the upcoming trading week. I still recommend trading safe until we get some confirmation that this market wants to move higher across the board. Aloha.